Are you watching ET Markets Live? I'm Neha Vashish Mahajan, and welcome to a brand new episode of ET Worldview, where we discuss everything related to global markets and much more. Today, I'm here with Mr. Abhishek Banerjee. He is the founder of Lotus Blue Wealth. Thank you so much, Abhishek, for joining us today on ET Markets Live.
Thank you very much for the opportunity and pleasure to be here with you discussing worldview.
All right, so let's quickly start our session for today. In today's session, we are going to discuss a lot of things like interest rates, gold prices, what's happening with Trump, and what's happening in China, along with India. So let's quickly start with the first thing first, which is about interest rates. Now, interest rates seem to be coming down across the world. What is the impact on Indian stocks? And let's also talk about what's happening globally.
Sure. So, interest rates are a function of economic activity, like, how much the economies are growing, but more importantly, a function of trade. So
Mm,
as trade slows down because of tariffs, because it's uncertain, right? Whether you should procure or not procure, you should procure more than you wanted to
mm,
procure so that you're insulated from further tariff hikes. This kind of uncertainty means that people are delaying purchases, right? If somebody wants to
yeah.
import a machinery from Germany to set up a plant in US, they are just delaying it. Or if they wanted to increase capacity to one machinery, they might be procuring three, thinking that maybe it's going to be more expensive. There's a lot of choppiness in the trade, and that reduces global velocity of money, which is essentially
Mm,
like if I'm a borrower, I borrow, but I then take the money and deposit it in another bank. So in aggregate, the money is just rotating, which
mm,
is kind of slowing down when there is more uncertainty. And this produces a downward pressure on inflation on one hand, but this excess procurement in anticipation of higher tariffs also produces higher inflation. So it's both pull and push in two different directions. And the net of
mm.
it seems to be that, net slowdown instead of, where we saw the initial pickup because of tariff. People like to preempt that by, for example, Apple shipping iPhones using an aeroplane
Mm, mm,
versus somebody else closing some procurement early with China so that they are insulated. That is, slowing down.
mm,
People are trying to be more domestic and self-sufficient in the near term, and that is causing downward economic pressure on pretty much all countries, including slightly in India as well. And this
mm,
essentially means that central banks now have more room to cut cost in terms of cost of money, which is interest
mm,
rate. And this is exactly what is happening. And on the back of that, for example, there's a ECB meeting also later today where they will consider rate cuts. European Central Bank. So overall, central banks are generally more, as it's said in central banking term, dovish, which means that they're more likely to cut rates. Hawkish means that they're more likely to increase rates. So now they're dovish, and this actually is good for equities because lower interest rates means lower discount factor, which is the denominator of equity valuation. So as a valuation, right, if this stays constant and this is reducing, the total ratio
mm,
becomes larger, which means that it supports higher valuation. And this is why it generally supports higher PE stocks in a low interest rate, and value will not perform well, growth will perform well, and so on. So all these have these knock-on implications. India is generally a growth market, though value
mm,
has worked sometimes. So higher PE stocks, micro, smaller stocks, as we have been saying, they are more
mm.
likely to benefit from a lower interest rate regime.
All right. Let's also talk about gold prices. Bullion prices have gone up. What are your expectations and why is this happening? And generally, what we see in the markets is when equities are down, gold goes up. But it's not the case anymore. Things have been changing worldwide. Sometimes it does, work around in that fashion, but most of the times we've been seeing in the last 1.5, 2 years that sometimes gold and equity both are up at the same time. So, what
Yeah.
is your take on what's happening right now?
So one of the key changes that previously when they were uncorrelated and why they're correlated now is that more and more central banks are buying gold as a reserve
Hmm,
instead of buying dollars, right? Which is the previous case. So that puts an
hmm,
upward pressure on gold. There was a recent comment by one of the investors who made a large investment in Adani Group at the peak of the crisis of Adani, where that gentleman's view is that gold will go maybe up to $4,000. We
Hmm.
don't share that view. I think for us, gold has peaked out, uh, pretty much now. But given that he has been so right about some of his bets, it's something which I definitely take into consideration. My
Hmm.
view is that gold has peaked out, but there are also people who are, for example, Goldman Sachs calling for $5,000 gold. So
Hmm.
there are definitely other views in the market that gold could go much higher from where it is. But my view is that gold has peaked out, but I'm more bullish on other bullion, for example, silver, than gold, which is has more industrial use. It has more use in electrical systems and EV systems, where rare earth is becoming more and more difficult to procure from the globe. So local rare earth, including silver prices, might see an upward pressure. Gold is not really
Hmm.
used much in industrials. It used to be used in photography, but now everything is digital photography. So essentially, gold is more of a store of value and ornaments, which is more sentimental and consumer driven.
Hmm.
So to that extent, I think in precious metals, I would definitely look at rare earths, look at nuclear material. I mean, unfortunately, these are not listed, or you can hardly have exposure to these kind of plays. But silver
Hmm.
is a good proxy to that extent. Therefore, silver seems to be something which should do well even from here this level.
All right. You briefly mentioned about inflation, US inflation, when we were talking about interest rates. Let's also talk about what is happening when it comes to Donald Trump. So Trump, he is at it again with his tariffs, and every 2 3 days we get to know something he has said about tariffs that's gonna affect the markets. Whether we talk about US markets or Indian markets. Now, Goldman Sachs has forecasted that US inflation will climb close to 4% this year. They also estimate that tariffs could be responsible for about half of the rise. Now, inflation outlook has also led the Fed to pause its easing cycle, and
Yeah.
yields are higher than most of the G10 peers. So, what is your take on this entire situation right now?
So one thing which has significantly changed about the tariff narrative is that it's clear in public domain that Trump and Musk do not agree on few things, and
Mm,
at least for a layman, the imagination was that whatever Trump is saying is probably vetted by Musk, who many people consider to be very smart, right? So
mm,
there was an implied opinion that this moves are smart, and now because of the rift, some people might start doubting the tenacity of those moves, as well as whether they're actually really thought through moves. What I think the market is totally not pricing sufficiently is that uh, the market has been trained to make tariffs look like a negotiating tactics than a sticky tariff. And my
mm,
view is that the tariffs are going to be much more permanent than what the market is willing to accept, which means that the prices will just be higher, and inflation will slightly be more stickier than it is. So we are going to see some rate cuts with the central banks in the near term, but it might not be in a continuous downward path, and there might be some reversals. So my personal view is that Trump is using the numbers, but he's inflating the numbers slowly as tactic, and the deflation will still end up at a tariff which was higher than when the world was without Trump, right? So that is generally inflationary in nature, but that is also, once it's done, done, people can move on. But till it's done, the softness in economy and lack of procurement, lack of industrial use cases, velocity of money, they will all be under pressure, and that is what we are seeing as a reactionary
mm.
move by central banks, where they're actually considering rate cuts or doing rate cuts. But to that extent, India is in a very good spot. We
Okay.
have lower oil prices. The oil prices have not added to our inflation. We're able to export, which was not the case much before, both in defense
Mm,
and consumer electronics as well as garments. We are able to, collect more taxes. We are able to give
mm,
tax relief to, people with less than 12 lakh of income. So all this means that while the rest of the world grapples with this tariff-led inflation or uncertainty, India can
mm,
quietly build and put out capex to take advantage of this uncertainty, and that's precisely what we are seeing, where we see private capex come in across India, there is about 10 lakh crore of cash on the balance sheet of all corporates combined, and that will slowly get deployed. And this is something which we will see in the next few quarters, maybe 4 to 6 quarters, and we have to keep monitoring whether people are converting their cash into fixed assets, which will produce things, and that will take us from the $4 trillion economy to the $5 trillion economy very quickly, much quicker than people expect. 1 trillion, adding $1 trillion to the economy.
All right. Let's also talk about China. China is going through a disinflation right now, disinflation, and uh, that I'm saying because annual inflation in China has not crossed even 1% in over 2 years and has hovered nearly zero at zero, despite the repeated fiscal and monetary stimulus since last September. So, what is happening in terms of China right now?
So China, the most important thing is the real estate, which was the main engine for their growth, where people were buying better homes, better cars as well. But real estate was a big deal, and that has slowed down. And there's lack of demand. I mean, primarily because the population growth rate is not as high
Mm,
as India, and
mm,
they have uplifted a large portion of the population into urban real estate from rural real estate. But at the same time, beyond a certain point, it's just better houses for the same family, right? So
mm,
marginal demand is hard to stimulate in a stagnant population demographic. Also, generally China has overcapacity in manufacturing because they are really really good in manufacturing. They are like they have really perfected assembly lines and manufacturing, which means they are very efficient, and there's hardly, it's like getting more efficiency out of Chinese manufacturing is like getting oil out of stone. So there's hardly
mm,
anything to be had at that level of efficiency. They can produce a lot and they can flood the markets, which is why you have these anti-dumping rules in many countries. uh, the issue, some people got interested in China about, like, 6 to 8 months ago, because it appeared as a deep value play. The Chinese PE was 12, whereas Indian PE was 22, so there was a huge gap, and a lot of
mm,
foreign money did flow back into China. uh, the often adage about value stocks is that it's like catching a falling knife, right? So if you don't
mm,
get it right, you will actually hurt your hand. So to me it seems like China still has work to do. They have a lot of room, right? They have a lot of fiscal room, they have a lot of uh, FX room, they can do a lot. The question really is that whether how much of their dry powder are they going to use now, and for how long. And that is something which they have to grapple with while they're fighting a trade war with China, with the US, and they are not getting any relief by routing goods through Vietnam, which they were able to do last time. So it's really
mm,
a tricky situation for China, and it's fine. I mean, they're more focused on probably military engagement in Taiwan and South China Sea. They also have distractions there. They have a trade war distraction. So within that
mm.
distraction, it's advantage India mostly, and that is what we should focus on. Of course, these economies that are very big, and they produce immense opportunities. But in the short term, I think it's very hard to find a better place to place your money than in India.
All right. Now, before now discussing about the Indian markets, some sectoral, highlights, let's briefly talk about Donald Trump's latest announcement on steel and steel exports. He basically, in his last week's one of his rallies, he said that he's going to increase the tariffs on steel into the US from 25 to 50%. Now, he on Tuesday he also signed a proclamation. Doubling the tariffs on steel and aluminum imports to 50%, but that excludes the United Kingdom and includes India, and possibly it's going to affect India's export sector a lot in the near term. So, what is your take on this situation? How is it going to affect India? And considering how much, India exports to the US in terms of steel, aluminum, and related products, what is your take on this?
Right. So I think India domestic market also needs a lot of steel, which they were basically importing from China. So you have to understand that when you have an import bill, you don't pay GST, right? Now, if you
Hmm.
do not have import of steel and you're not able to export, that domestic steel will flow into Indian markets at whatever prices they can get. There was, of course,
Hmm.
this GST issue, and I think that what this will mean is that it will create more GST compliance in among the steel manufacturers and steel consumers within India, because a lot of it was import and export where GST is not applicable
Hmm.
in the form of like input credits and so on. So to that extent, this particular move will definitely get absorbed by the demand that is expected out of India itself, and this
Hmm.
demand within India will create more GST upward pressure for companies, and I think overall that will lead to better indirect tax collection. So my view is that while individual steel companies might be suffering a bit for the short term, overall
Hmm.
for the ability for the government to spend, which is large portion of the spending in the GDP right now, that produces
Hmm.
better outcomes for the overall economy.
Okay. And do you think that India should seek out for a waiver similar to UK at this point? Or do you think it's not possible right now?
I'm sure they tried. I think they're probably not very interested in using
Hmm.
this as a negotiation tactic, right? I mean, after all,
Hmm.
how big is the steel export of out of India versus the other priorities that they have? So I'm sure they tried.
Hmm.
I'm sure it was discussed, and I'm sure this was not made available at this stage, and hence we see what we see. Overall, I think the bigger question is, can pharma be exempted, right? Which is a much
Hmm.
more listed market for us and larger companies. So I think pharma is a bigger question than steel for India, and hence I'm sure it will be taken in stride, and we'll see what happens. But tariffs are sticky, and I think tariff also allows for more inspection of goods and services coming into the country, and creates more stronger borders. So I think we should not look at tariffs only from a economic standpoint, but the
Hmm. Hmm.
ability
Hmm.
to monitor and inspect goods and services coming in, because you have to figure out what tariff to charge. So both angles are a important angle.
All right. Let's quickly also talk about markets being range bound right now. What is the outlook on the markets as per you in the near term? What's happening in the markets?
So markets are range bound because of they're not getting very definitive cues of growth. So one thing which is definitely the case is FPI interest is back, domestic money is flowing in. There's
Hmm.
room to cut further in interest rates. Uh, Basically, our electronic PLI scheme is working. We are able to collect more taxes. We have at the record, GST collection.
Hmm.
GDP has surprised on the upside. Cost of capital is coming down. There's more tax compliance. So, given all of these reasons, I just look at these pauses as time when you accumulate your wealth in the market, and then wait for that
Hmm.
uptick where the wealth grows. So my view is, of course, very positive even for the rest of the year. I think from where we stand, we do see much further upside in the global markets as well as Indian markets more so. So we are quite positive of the equity market direction. Of course, with volatile days there, but I think overall we are pretty sure that we will see a lot of you know good things happen for long term investors in the market.
All right. And any sectors that you could see in the future getting benefited in the near term and are worth looking out for?
So in the very immediate term, automobiles and consumers are going to be beneficiaries because the impact of tax cuts have come in the April salary, right? So suddenly people are
Hmm.
seeing more money in their bank account, and that
Hmm.
creates desires either to increase the investment portfolio, or to go for that car that was just out of the reach, or to buy that home that was just outside the reach. So this
Hmm.
consumer driven sectors, be it automobiles, be it real estate, be it things which include money on vacations. Basically, people wanting better, or the premiumization of their consumption is definitely a play that we see very strongly in the, at least the next 3 months, quarter time frame that should really take the market forward. Pharma IT services still remain a challenge. I think IT services have done pretty well. We have been negative with IT services for more than a year. In that time, IT services have done better than we have expected, but they remain a challenge. I mean, their business model is at risk. I think what we are seeing is basically their FX led margin expansion, where the Indian rupee has fallen, where the dollar has strengthened over the last couple of years. But as a structural next move, I think for IT services, it still remains a bit of a challenge.
All right. What is your outlook on micro caps as a section in the markets? And a lot of brokers are also positive on micro caps as of now. What is your take on micro caps in the
So
current
we are very
market
we are
scenario?
we are very very bullish on microcaps. I mean, we have been a microcap specialist throughout, apart from being global macro. Being
Hmm,
even if you look at the SME market, which is listed, there are 1,200 stocks that are listed there, and the index itself has produced a annualized return of about 65% CAGR. So that's, but there is no passive product. You cannot access that index. It's very treacherous. There are many stocks who have lost 98% of their value, but yet the best performing stock has given you 35x return. So it's definitely a stock pickers market, and especially in microcap, there are many companies that are good. There's a list of companies that are called BSEX shares that are listed on BSE but not on NSE. These are these
hmm,
pockets of opportunities that have always been starved of liquidity, because the attention has been in the top 7 500 companies. But microcaps now, because of the valuation concerns in some of the small and mid and large cap companies that are there, money is trickling down to the smaller companies that have always been deprived of investor attention, because there's more value there. So definitely, there are brokerages that are recognizing this, and we have been doing this for the last 6 years. We're focusing on microcaps, so definitely
hmm.
we see that it's something which is the next step for many of the investors.
All right. So before we close, let's also talk about what are the data sets that are important to keep an eye on in the near term. Is there anything coming out in this week or next week that we uh, need to focus on?
I think the commentary from central banks is very key in the near term, because that drives a lot of the short term sentiment, but also
Hmm,
tax collection data, oil price data, like oil price volatility, tax collection, government, U.S. government bond auction, and the
hmm,
yield expansion on the back of that, treasury yield curve, slope. These are some
hmm,
of the data that are necessary to determine global macro. In the local context, obviously, how the data for automobile numbers that are published monthly, they come out. Any preemptive tax collection reports in the form of GST, as well as
hmm.
essentially uptick in the consumer sentiment, like services PMI, and so on. We have to look for these kind of data to make the next steps. But whatever we have in the near have seen so far, it generally makes us very positive.
All right. Well, this marks the end of our segment for today. Thank you so much, Abhishek, for taking our time and joining us today on ET Markets Live.
Thank you very much, and a pleasure to interact.
Thank you so much. Thank you, everyone, for joining us today.
Bye.